Today we'll be going over the week 44 portfolio update since I started living out of my Robinhood Brokerage account and investing 100% of my paycheck back in May 2025. I'll go into all the details of breaking down my performance this week, dividends received, portfolio thoughts, and the usual finance video of the week. It's been another rough week in the market with the war in Iran volatility. I'm sure a lot of people have seen it in their portfolios, but through that, I'm still investing and DCAing 100% of any income that comes in for me right now, which is like unemployment, credit card cash back, anything like that, and still paying all my bills with my brokerage and margin despite that. As usual, you'll get radical transparency on this channel. You'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, give a like and subscribe to keep the channel going. Just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risks, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. As a refresher for anyone that's new to the channel, this is my fully invested flowchart that I use every month. And this is the layoff edition, right? I invest 100% of my income on this channel. Previously, I'd invest at least 10.8K a month, but now that's $1,152 every week with my unemployment income since I got laid off the other week. And that'll be until I start my new job in a few weeks. So I invest normally into growth and high yield ETFs, but with the layoff, I'll be focusing on safer high yield ETFs for now to keep my monthly cash flow going. I've stopped using a traditional bank account to live entirely out of my Robinhood Brokerage account. I use cheap margin of 4.5% to pay all my bills and bridge the gap between my monthly dividends and monthly bills. The goal is to ideally never sell a share and to never take money out of the account that way, apart from when I need to rebalance between funds. So I want to forever compound both my growth and high yield assets and eventually have my monthly dividends exceed my monthly expenses. If you want an in-depth breakdown of the old chart I used to run when I had my old job, check out the video at the top right. The updated chart once I start my new job will be a little bit similar to that one. So let's just dive right in. So if we pop over to Robinhood and kind of check out the chart here, overall on the week, definitely a rough one. So I ended the week at, and this is with some overnight numbers, at $143,492 with a 0.05% gain or $78. On the week was definitely a rough one. Started off strong and kind of started off with in the green when you look at these, right? And then as the week crested past the midweek, there was more news coming from the Iran war and the volatility there. So things just kept dipping and dipping and dipping. It's looking like at this point there probably will be a ground war. We'll see. But I'm sure that's going to dip the market more and just going to kind of continue that roller coaster we've been riding for the last month, right? And just it's going up and down, but mostly just kind of trending down. So on the week I was down 5.13%, which is quite a bit, 7.7K. On the month I'm down a lot, 11.65% or 18.9K. So pretty brutal overall. Over the last 3 months, 27.1K or 15.89%. Year to date, overall down 15.02% or 25.3K. So quite a bit, right? And really that kind of just highlights the dangers of margin, right? And how you really get amplified on the bottom going down and also on the way up, right? And we've mostly just been having a lot of downward pressure. So that's kind of hitting a lot more, right? So if we compare it to even VU, right? What's VU at year to date to compare it there, right? It's down 7.73%. So almost double the volatility of VU, right? Given my margin amplification. So something to be mindful of if you do end up using margin, right? That's why I give all those disclaimers in the beginning of the video. And and then after we go down 18.2K or 11.28% since I transferred everything to Robinhood in July last year. So that's where it's looking. We'll pop over to my spreadsheet to kind of look at stuff a little bit more in depth here. As far as the top line numbers, the gross value of my portfolio has gone down a lot with how stuff has gone down this week, right? So my gross value is sitting at 306.8K. I have margin used of 163.7K, which gives me a net value right now of 143.1K. Again, here you can kind of see the amplification from Friday, right? It was down 1.32% or 4.3K. And really, so if I was just going off the gross value, that's what I would have been down. So that's kind of roughly matches what the market was down that day. When you look at these numbers, right? Actually a little bit better than the market compared to the S&P and NASDAQ. But because of the margin here and the amplification of that, right? This loss is actually going against this number. So that was actually a 3.06% down day, right? So very important to keep that in mind with margin, right? But with that, So I kind of cleaned this little section up here just so it's easier to read out week to week. But so I have my total return column on the left and then my kind of unrealized gains and realized gains column on the right. So as far as total profit, like if you factor in all my dividends received, the realized gain losses, which is this, right? And margin as well. Like the portfolio is actually in the green when you consider all that together, right? So I'd technically be up 23.66K or 16.52%. So yeah, when you factor in like all the dividends that have come in over the last year, right? And the last couple of years, really, that's quite a bit. So that adds up and that kind of helps offset some of like the realized gains and losses that I have, some of the capital gains, right? That helps a lot in the total return column. And then after, of course, on the unrealized gain side, that's a lot lower. Yeah, especially when you factor in my realized gains and losses from my rebalancing the other week, right? So that's actually down minus 37.3K or 26.09%. So quite a bit. But yeah, really, really important to factor in the total return, right? But even then, definitely a lot of red, right? Just from the fresh rebalances from some of these other positions. And then also like, yeah, just things getting dragged down by the volatility, right? XPay actually finally dipped down in the green, even on the unrealized gain side. It was up for a while there. So actually might be a good time for me to start re-dipping back into XPay as far as some investments go. So might maybe be doing that this week with my unemployment check. We'll see. And Chippy just kind of been battered, right, with the war volatility. YMX and Alti have just generally been down even before this, but still getting dragged down. TDAC, T-SPY, SPY-I all getting hit pretty hard as well too, even though they're indexed. The only thing that's holding up nicely is MLPI, given that it's like the energy trade. Gold is kind of just holding on there to the green and the total return side. It is red on the unrealized gain side now too. It's lost a lot of its gains over the last couple of weeks, but definitely glad I bought the dip on that earlier this week, right? I think, yeah, pretty much bought it earlier this week. Yeah, there was that big dip the other day on the Friday, right? So pretty much bought the dip there. Yeah, if we actually check in Snowball, you can kind of see, yeah, I bought the dip right at the bottom before it bounced back up the next day. So yeah, I also love this part in Snowball, just kind of seeing all your buys and kind of seeing exactly where you're at. But yeah, that's where stuff is there. As far as how stuff is split up between growth and high yield income, so 161.8K of the portfolio is in growth, so roughly 52%, and 145K roughly is in a high yield income, so 47%. That's what makes up the 306.8K. If we check on the margin health of the portfolio, reorganize this a little bit as well too, just to kind of like really that like the blended margin maintenance gets applied to the gross portfolio value here, right? And then gives you your margin maintenance below here. But yeah, we went over all these numbers. As far as the margin maintenance, that's sitting at 76.7K. And you basically get that number by taking your gross portfolio value and multiplying it by your blended margin maintenance. And mine's like all 25% now, given that after my rebalance of all the positions the other week, all my positions are 25% margin maintenance, which is nice. It's the most optimal it can be to kind of maximize the use of margin and equity and everything and my buffer. So that gives me basically a buffer of 66.4K. So this has reduced sizably with the drawdowns, right? So when you take that buffer and then apply that to your net portfolio value, that gives me a buffer of 46.41%. So this is what you typically see on Robinhood. But for me, I always like kind of looking at this number here. So 21.65%. So this is the margin buffer. So you're taking this and then dividing it by this, right? Your gross portfolio value. And I think this one's the more important one to look at because this is all your assets, right? And this one just kind of makes you feel a little bit more safer than it actually is, right? I think this kind of gives a better picture. So like the market would have to kind of correct 21.65% to hit this margin maintenance number, right? So this would actually be the equivalent of a 46% drop on the net portfolio value, given that you have the margin amplification factored in. So yeah, important to kind of calculate this number for yourself, really. And it's, yeah, once you have your margin buffer here, right, which you kind of determine after calculating your margin maintenance, when you multiply your blended margin maintenance, you can just take this and then divide that by your net portfolio value for your Robinhood one, and then by your gross value for your gross portfolio value margin buffer. And then as far as my buying power, I'm sitting at 77.9K. You basically take that by doing your margin total minus your margin used, right? And that's your margin buying power. If you half that, that's roughly your cash available for withdrawal. So I have 38.9K available for withdrawal. This is like cold hard cash I could take out of the portfolio if I wanted to, right? And then my equity is sitting at 46.65%. So yeah, this is taking quite a bit of a hit, right, over the last month since my layoff. And because I don't have as much income coming in anymore, I just have the unemployment and the dividends essentially. So it hasn't quite replaced my full paycheck, right? And before that, I was basically getting my paycheck plus the dividend. So that was like 15, 16K that was coming in a month in the portfolio. And now it's more like closer to 8 or 9, right? So yeah, like I said in a previous video, I'm kind of okay with this dipping under 50% for now as a special circumstance given the layoff, right? But I fully expect this to kind of get back above 50% once like my tax refund comes in this week. Once I start getting a normal paycheck again, once I get my signing bonus and get that all invested, I think that should kind of help buoy the portfolio, right? And yeah, and then as far as the monthly dividend, so that's kind of being estimated right now at 4.5K roughly. So if you just apply this to just the high yield income assets that's in the portfolio, that's roughly a 37.53% distribution yield, which is nice. If you divide that by the full portfolio value, it's actually closer to like 18.47%. So yeah, pretty good overall. I think I'm happy with that income and very happy with that in the layoff right now too, despite having some more NAV erosion funds here like Alti and YMAX, but then Chippy's kind of wooing. Chippy's helping bring stuff up on that end with the higher yield there at like in the 40% range. But as I mentioned too, I'm mostly going to be focusing on these guys going forward, right? And then XPay as well, more so than those guys. If we pop over to Snowball, can kind of take a deeper look at stuff here. So if we look at the categories, so yeah, like I mentioned, like the NAV erosion funds like YMAX, Alti, those are hitting the portfolio hard overall, right? BTCI is of course getting hit hard with all the volatility as well. So yeah, hopefully this bounce back once Bitcoin does. Chippy hopefully should be able to get a good bounce back with how that's composed compared to these ones. This one's down, yeah, quite a bit at 10.85% or 10.7K. Anchor's just holding on to the green there. It's actually dipped in the negative now as far as like the capital gains, right? So down 2.5K but have like quite a bit of dividends there. Really, this is being held up by XPay and MLPI. The rest, like T-SPY, TDAX, SPY, QQQI, these have all taken a hit, right? Because the indexes are down quite a bit, as you kind of saw. Like SPY was down 7.5% on the year so far. So yeah, I pretty much invested in these like right before the war. So that's why this is kind of taking a hit alongside everything else. But it is nice to kind of get all that income as it's coming in, right? And that's kind of helping kind of keep those afloat and not have the losses be as bad as even just like normal VU and whatnot, right? So you can kind of see that SPY here is like not down 7.5%. Same for T-SPY, right? Because the dividends are kind of helping cushion things. And then my hedge here, there's been a little bit of recovery CLSC, but yeah, still in the red there, 2% or down a lot, just because like international has been affected a lot more by the war. And obviously OR has a lot of Japanese exposure, right? So Japan has been hit pretty hard by the Strait of Hormuz being closed. Then gold just holding on there to the green. And then yeah, as far as like my anchor ETFs on the growth side, those are all holding up pretty good. Yeah. My old faithfuls between VU, SCHE, and QQQM, which I've had the longest in here, are good and still in the green, but like definitely come down a lot. And then VGT and SPMO just got hit hard by the war volatility as well, but hoping these will bounce back once we kind of clear out of here. So yeah, and any dividends that I do receive for any of these, so like all these pretty much pay dividends, right? I'll be reinvesting them still into the growth funds. So that's the only thing I'll be reinvesting as far as dividends go, if you saw the video from yesterday. And yeah, so that'll kind of be what's still kind of going into the growth portfolio as far as dividends versus the normal paycheck stuff. And yeah, and if we pop over the growth side of things, honestly, like the charts here, for some reason this week are a little busted, unfortunately. Like when I was kind of checking stuff earlier, yeah, some of this didn't seem quite right. This might be at least fine. Yeah, this one was definitely wrong. Like I'm not ahead of the S&P this year. But anyways, at least on the week, seems like accurate enough where, yeah, down 4% here or down 5.9K. And then if you compared to SPY, that's down 3.3K or 2.2%. So yeah, it was outperforming for a bit there. And then after that last day dip definitely kind of got me under there. And then if we check over to the heat map here, my favorite part. So year to date, you can kind of see a good overview of stuff. SCHD is still holding on strong at 11%. MLPI holding on good on the energy side. Gold just barely holding on. And then everything else just got hit in the red, right? When you can kind of see there. I think is kind of doing its job as far as kind of like the long short hedge here. It's like holding up good, 2.2% compared to everything else, right? Which is nice to see. But if we check on the week here, let's give it a look-see of how we did. So yeah, a little bit of a mixed week, mostly in the red, but SCHD held on held on to the green. ORR base just barely held on to the green. CLSC down a little bit. Energy trade doing good still. Gold had a nice run up after the dip last week. And yeah, everything else just kind of got hit pretty hard, like VOO, any VOO related ETFs. So VOO, T-SPY, SPY-I, XPay, all down like in the 2-ish%. VOO as well, just down quite a bit. So yeah, that's kind of like the heat map for the week there, right? Alti kind of just pretty much matching VOO's performance, which is cool to see. YMAX just down a lot more. It's just been hitting. It's just got hammered a lot this week, actually, like double any of these. Yeah, kind of curious to dive into there eventually just to figure out what holdings are bringing it down there. But yeah, that's the picture of the heat map this week. As far as the dividend calendar this week, so yeah, some nice tidy little dividends here, just a little above 700, so 740-ish it's looking like. So had $306 coming from Chippy at 47%. Had $224 from Alti coming at 74%. Had a little $9 coming from VGT at 0.06%. This was a quarterly dividend. YMAX's dividend got cut quite a bit this week. This was down to like $52 at 23%. And my quarterly QQM dividend at $36 or 0.55%. And SPMO's quarterly dividend at $103 or 0.92%. So almost all the dividends are in for the month. Really just missing SEHD on Monday, which I'll be reinvesting, and VOO as well that I'll be reinvesting. So probably going to be putting it either in SPMO or VGT since those are down pretty hard. But yeah, look forward to that next week. And then that should kind of complete the month as far as dividends. Yeah, strong month overall. Like, yeah, just sitting at just a little over 4K right now. So I'll be at like 4.5K after those dividends come in on Monday and Tuesday, which is cool. So definitely beating out February as far as dividends, which is nice to see. And definitely beating out last March, which is nice. So kind of seeing that nice growth there in the dividend year to year. And yeah, and then if we look at the yield on cost, right? So things are mostly holding on strong for the safer yielders, right? TDAC, T-SPY, QQQI, you can kind of see the percentages there. Roughly its payout where stuff got hit, got hit previously and is still getting hit, right? Alti had like a 74% dividend, but it's my yield on cost based on the capital I have allocated to it is probably closer to 45%. BTCI got hit hard. That's like at 29%, but I'm actually more at like 16.94%. And YMAX as well, the yield was like 23%, but that's closer to 13% given the capital I have on it. But the rest is holding on pretty good. Chippy down a little bit given my early investment into it in the dip, but yeah, still holding on strong there in the 40s, which is nice. But yeah, that's the yield on cost there. As far as updates to the portfolio, I mean, yeah, there was a video yesterday that you might have checked out where I went over the projections, right, for all this stuff. Actually, one thing that I forgot to mention in those videos too, that's worth mentioning. I did have this cash available for withdrawal column that I was kind of calculating just to kind of get a rough idea of like how that would grow and ebb and flow, right? So yeah, it was interesting to kind of run it, especially for here, because I was worried that maybe it would get close to zero or whatnot, given how much margin is getting put on. But yeah, it would actually, for the more aggressive full dividend reinvestment thing, it would actually kind of bottom out at like 23K-ish here. And then after it would kind of steadily start climbing back, right? As we kind of added back to the portfolio with the dividends and everything and all that. But one thing that is nice in a more conservative format is that this kind of just steadily grows, right, with the portfolio. So in theory, like assuming that all the same cash flow from like the paycheck and the dividends and everything just keeps growing, which is nice. So yeah, that's another plus to this more conservative method that I'm kind of mostly going to be using, right? Just kind of having that nice cash available for withdrawal buffer that just kind of keeps growing in the background. Also, that kind of maybe just shows that maybe I can kind of leverage that more to kind of invest a little bit more into stuff to push things. But yeah, good to have that cushion. Just a lot more comfortable, like say get to 40 here, right? Yeah, this would like 236.7K of cash available for withdrawal versus like 98K. So that's a pretty big difference there, despite the lower net value of the portfolio there, right? Recap that, right? Going forward, I will still not be reinvesting the dividends, right? As I mentioned, I'll just kind of let that deposit the cash and margin. I might consider like around the 65%, 70%, 75, 80% mark maybe, where I might maybe start reinvesting dividends there and kind of hitch a ride on like the turbo boosted dividend reinvestment there. But we'll see. We'll see once we reach that point. Right now, I'm definitely not anywhere close to there. We're down at like 46%. So got to climb out of that and get back over to a better equity threshold. And then we'll cross that bridge when we get there, right? And you'll see that with full transparency as usual. And yeah, and then as I mentioned too, I'll be kind of investing 100% of my paycheck into high yield ETFs going forward. So no more growth for now. Again, maybe that will change once the equity balance shifts there, but yeah, pausing that for now. As far as income coming to the portfolio, yeah, I have the unemployment check coming, so I'll have another $1,152 to invest on Monday, tomorrow. And hopefully I'm going to have my tax refund come in as well. So I should have a 4.2K refund coming in from the IRS, hopefully this week, if last year's cadence was anything to go by. So yeah, looking forward to investing both the 1.1K from unemployment plus this refund, right? So we'll definitely be shooting videos on those next week, and you can get to see exactly what I invest in and how much you're going to have in the game for those. So yeah, we'll keep chugging on. Despite all these dips, right? Despite all this red, still investing 100% of my paycheck, whether that comes in the form of unemployment, tax refund, all income gets invested. Nothing goes to waste. Every dollar is kind of working for me and for my portfolio, which is kind of just awesome to say. It's really kind of truly paying yourself first in like every sense of the word, like to the most extreme point of the word almost, right? And to end things, I wanted to check out the finance video of the week. So this one's kind of like a nice special one. This one's actually one of our members on the Discord, Emotional Support Pinata. He started living out of his brokerage recently too at the beginning of this year and investing his full paycheck. So yeah, he was inspired by channels like Paycheck Portfolio, like I was, and also inspired by channels like Rob at Velocity Portfolio and mine. So yeah, very flattered that he was inspired to kind of start a channel and document his journey. Honestly, the more the merrier. I'm excited to see how he does. And particularly for him, it's kind of especially promising because his monthly expenses are very low, at least from what he's told us in the Discord. I think he lives on something like $35K a year of expenses, which is like really low, right? Which is super nice. So, which means that like he might be able to reach his goals a lot faster by kind of doing the full paycheck investing and living out his portfolio. So yeah, really excited to kind of see how he does. Definitely check out his channel here, Fast Fire. I'll link it in the description below. So check it out and give him some love and support. He's just starting out, 15 subscribers. Yeah, we're all trying to support him, which is cool. And yeah, give that a check. And yeah, that's the video. As usual, if you want to follow me off YouTube, there's a bunch of different ways to do that. You can do that on Blossom Social. You can do that on Snowball Analytics. My free portfolio link is in the description below. I don't want to paywall anything. I don't want to hide anything and hide my numbers behind anything. You can kind of see all that for free in the links below. Feel free to peruse around and check it out. There's also the Patreon as well too. All my backlog of videos I upload on there just in case there's any more shenanigans on YouTube. And then also, like I mentioned in the last video as well too, I just added the membership option on YouTube channel as well too. Again, nothing that's paywalled here. This is more kind of just like light perks as far as like our Discord's totally free and public, but there is like a little private section if you want to get some just more priority responses there from me and like other members that are supporters across Patreon or YouTube. Yeah, priority replies to comments, nice little emojis on YouTube itself, and yeah, just satisfaction of kind of keeping the channel running, right? And it's like kind of like a little monthly jar if you really appreciate what I do here. And yeah, keeping that to $3 a month, similar to Patreon. Wanted to kind of really match the perks across both channels, and this is really just another option if someone's interested in supporting the channel that way. And then of course there's the Discord, so a lot of chatter in between videos. I love posting on here in between, just going off any people talking about how they're living out their brokerage in different ways, right? Here's Emotional Support Pinata, by the way. He posted his first video here, right, in our YouTube's video sharing. So a lot of other YouTubers on here that post as well. Happy to have them post, and people get exposure to different ways of doing things and really kind of pick and choose what works for them, right? Because everyone's situation is different. So highly encouraged of that. And in our Discord, we're very open about that, which I love. So yeah, we're approaching 350 members. Consider joining. Yeah, all my trade alerts as well too that you'll get. A lot of cash back buys this week if you look at that, and some dividend buys as well. But yeah, everyone gets a heads up on that before the videos go up. So yeah, if you appreciate this transparency, please give a like, subscribe, keep it going, and hit the bell notification if you want to be updated about future videos. And I'll catch you in the next video, likely, after tomorrow for my full paycheck investing for my unemployment check. Catch you then. Peace.